Welcome to Every Dollar Counts with Josh and Jay, the shot of truth serum for your investment and insurance questions. I'm Josh Knoll, the owner of Gulf Coast Financial Advisors, and I'm joined by my co-host, Mr. Jay Stubbs, director of the Gulf Coast for Concourse Financial Group. We're brought to you on the Gulf Coast Financial Advisors podcast network. Well, COVID, here we go again. COVID has brought to light that it's really imperative for a lot of folks to get their financial house in order, particularly with risk management, particularly with life insurance. What you all are going to hear today is a little behind the scenes information and facts on how COVID has actually impacted the insurance industry, with insurance companies actually losing some money, which is not necessarily the norm, restrictions on different ages and the amounts of coverage, postponing of applications with recent COVID situations, all this stuff, increased underwriting, all this stuff that sounds kind of negative, but Jay and I are going to walk you through what you're getting into with life insurance because, quite honestly, more and more of you are asking about it, and I think that's a direct result of COVID kind of slapping life right in our face for us. But before we dive into all that, though, let's have our friends from Sloth Racer kick us off. Jay, buddy, how you doing today?
Josh, I'm doing great. It's good to be here in studio with you at Deep Fried Studios with our producer, Johnny Gwynn. It's nice outside, and we are certainly enjoying some of this fall weather that's rolled in along the Gulf Coast.
Yeah, fall weather, which means that it's only in the 70s in the afternoon, which is nice, and we're dipping down in the 40s a little bit.
And I'm enjoying doing outside activities, building the fires, going to sporting events, kids on the soccer field, and everything above, and even enjoying some of this college football scene that's going on.
Yeah.
Golly. We don't time date or time stamp our episodes, but it's an interesting world we're living in with all this college football stuff.
Absolutely. Well, quick housekeeping for compliance. Jay Stubbs and Concourse Financial Group are not affiliated with Prime Capital Investment Advisors, Qualified Plan Advisors, or Gulf Coast Financial Advisors. And Josh Knoll, I'm not affiliated with Concourse Financial Group. Well, I'm going to set the table this way, Jay, because to be honest to you listeners, Jay's done the homework for this one. I'm going to come in and try to hang on to his big brain and how he goes through all these facts and numbers. But in my particular practice, Gulf Coast Financial Advisors, life insurance is a big deal. I'm a big believer in life insurance. I actually came up, those of you who know my story, I came up on the insurance side, built Gulf Coast Financial Advisors into a fee-based financial planning firm, but with my majority of my experience in the past was on the insurance side, life insurance, disability insurance, long-term care, things like that. And so we keep it as part of our offering for our financial planning services. We believe in risk management. You know, we want to plan your upside, but we also want to protect your downside because stuff happens in life. So with that table set, Jay, what I want to kick it to you is you've been staying on top of these studies regarding life insurance and the impact of COVID. So what I want to ask you is, what are some of the facts that have jumped out to you?
Well, I appreciate that, Josh. I will get into that, but I'm going to set the table a little bit more broadly. That there's a lot of facets of one's financial life that need to be protected, and some may need to be addressed sooner than others based on what you've got going on. So I always recommend somebody speak with an advisor like yourself and make sure that they prioritize those and work with you on the different ways that they can protect their overall financial life. There's a lot of different things out there. In fact, there's 7. I won't list them all off right now because we've done that in previous episodes, but today we'll focus on protecting the family, protecting your income, specific to loss of life or unexpected death of a breadwinner of a household, or even your spouse who may not work and bring in the primary dollars for taking care of the family, but what happens. And then the study that I'll reference is from LIMRA, which stands for Life Insurance Marketing Research. They did a 2021 insurance barometer study, and they found that the life insurance industry has seen a resurgence of interest, and that's because COVID and mortality, death, is more present in the minds of us all. We hear about it. We certainly know that a lot have lost their lives due to COVID, and there were a lot of underlying conditions, and there were a lot of the older age market who, quite frankly, didn't think that this was their time, but then they get this dreaded COVID-19 and they experience the health issues and they succumb to it. So the study goes out and says, okay, consumers, here's some different questions we're going to ask you, and those consumers come back with their answers, and then the polls come out, the data, the analytics, if you will, come out. From that barometer study, it says a third of the customers or consumers out there and nearly half of millennials say that they're more likely to buy life insurance coverage because of the global pandemic. That is big to me. I have, and Josh, you can answer this, I have people calling me, just sheer fact that I've been in the business 22 years, they're calling me saying, hey, I need to get some quotes. I need to increase my coverage. I need to review my plan. Can we do that? And we can, certainly. You've mentioned, you've had people call you saying, I need to get some rates on that, and certainly something I need to cover, whether it's a small business owner protecting his or her family, or it's a family person working for a W-2 employer that says the offer or the coverage I have through work just isn't enough. COVID has brought to light somebody thinking about their life insurance plan. It's not a perfect analogy, but it's just like scrolling through and seeing something, a nice beach somewhere, and it says, we need to think about our vacation.
Right.
The same thing holds true. As you hear a COVID story, you hear of somebody passing away, maybe it's a neighbor or a family member, or certainly somebody within your community that it wasn't their time, but COVID was and caused their death. It's starting to make people think about life insurance.
Well, okay, so these, you mentioned earlier that sometimes from the COVID deaths, we had people that were a little bit older. You and I actually are aware of sometimes where people, I would consider them younger, 30s or 40s, being impacted by this. So with the impact that COVID's had on the industry, and with this becoming top of mind for so many different age groups, what are some of the things that those folks need to know that have coming into it? Maybe they've never even thought about life insurance, or maybe they've dipped their toe into it before, and it was 3 or 4 years ago when the insurance industry was a little bit different, hadn't been changed by COVID. What are some of the things that they need to know coming into it, the good and the bad, if you would?
We'll take those kind of one at a time, and let me preface the good and the bad with this. I am the benefactor of a family protection plan that was realized when my father died in 1981 in a car accident. I was 4, my sister was 14, my mother was 36 years old and widowed after my father at age 41 passed away. Life insurance was in place. So I speak to you, those that are listening, with passion about the risk management industry, and I've always said you need to have a plan. Do you have a plan in place to protect your family in the event of premature death, hitting by the proverbial bus, heaven forbid, getting COVID or any other dreaded disease that takes your life? What is the plan? And the ultimate thing to think about there, if you're listening, is would we experience any financial hardship? Would the surviving family members experience hardship, and how fast would we experience hardship if that person passes away, whether it's the breadwinner or the primary caretaker within the home? What is the issue going to be? And if through that study, it said that 42% of the consumers, 42% said it would only take 6 months after the loss of the primary wage earner before they would face financial hardship. That's 180 days, and it flies by. And I both know that. So understanding the consequences of not having that plan, what are some things we now need to consider? Well, COVID, the good, let's talk about the good. The insurance companies have made it easier to apply. You don't really have to go out and sit down with somebody face-to-face and do a paperwork with an ink pen. You don't even have to go through a pyramid exam if you're young and healthy enough. You can actually get what's called accelerated underwriting. Insurance companies have brought that to light. You can go out and apply for and probably obtain, if you don't have any prescription medications or you don't have any significant health history or driving issues on your MVR, you get up to $1 million, sometimes $2 million of life insurance coverage without having to jump through too many hoops. And you can do it over the phone with your financial advisor or your insurance professional. So, Josh, you've done those.
I have.
You've helped people execute their risk management plan over the phone with a quick Zoom call. You go through the needs analysis. COVID has brought to light the efficiencies. So that's the good. COVID has also brought to light the opportunities to get more coverage for lesser dollars. Yes, we have experienced some losses, and I'll speak to my company's losses here in just a minute. But quite honestly, term life insurance market and even the permanent life insurance market, people over time are living longer. So the rates today in 2021, based off the most recent mortality tables, the rates per thousand are a lot less today than they were 5 years ago if you were thinking about getting coverage. Or if you bought something 10 years ago and now you think, I need an additional $500,000 because I'm making more money now. So not only is it probably less expensive per thousand, it's somewhat easier and more efficient to obtain and go through the process of getting that coverage. Does that make sense?
100%. And I've seen that in my own practice, especially with the tools that Concourse Financial Group has provided with the accelerated underwriting and the e-ticket and all the things that we can do. That was really, really important during COVID when, I don't want to tell you that lower Alabama, the Gulf Coast, went on lockdown like the rest of the country, but we still had some people not comfortable coming in, but we're wanting to get some of this stuff taken care of, and we were able to take care of them electronically.
Well, and we experienced the Zoom meeting fatigue. But quite honestly, if somebody has this, if it's a priority to them in their plan, the digital life insurance solutions are here. I mean, we really don't have to. I mean, if you're young and healthy or even middle-aged and healthy, but you don't have a lot of chinks in your armor, the digital age of the insurance industry is here, and you can set up a plan in less than 15 or 20 minutes, apply for the coverage with simply providing a simple answers to some medical questions. You do that all in the comfort of your own home or your own office without having to leave or drive across town or downtown. The digital age has made things fantastic.
Well, all right, so Jay, I'm gonna.
That's the good.
That's the good. So yeah, I'm gonna put myself in the feet or the seat of a potential buyer. I've had COVID. I mean, I haven't personally, but let's say somebody says I have COVID. Man, I need some life insurance. What am I looking at? What am I getting into?
So if you didn't have any issues with COVID and you stayed at home, you weren't admitted to the hospital, you didn't have to do anything drastic medically, then as long as you're 30 to 60 days out, depending upon the different insurance companies, and Josh, you can represent 20 of them through us, you're fine. You're insurable, especially if it didn't cause any damage to any of your major organs and things like that. So you didn't have to go into the hospital, didn't have to go on a ventilator. If everything was fine, you just felt bad for a few days and you quarantined and all is well, then you are still insurable and COVID does not affect you, especially if you're 30 or 60 days out. If you did have to go into the hospital, you're still okay as long as the reports from your primary care physician say that, hey, this person's they're fine. Yeah, they had to come in for treatment, but they are good today. And of course, the insurance company is going to check those records. You're still insurable there. Some insurers, though, have said, hey, we're going to limit the coverage amount that we give some people. We're going to set a cap on the age of the insured we're looking at. Some of them still have COVID restrictions on ages 80 and above, because the older age clientele are a little bit more susceptible to mortality if they contract COVID. Many insurance might postpone but not decline an application. So postpone is not a bad thing. Right. It just means we got to wait a little bit longer for putting the plan in place. They'll require those medical records or other valid evidence that the applicant, the insured, is fully recovered before they'll give them a policy. Now, a lot of insurance companies did experience COVID losses last year. The company that I work for, our parent company, Protective Life Corporation, they just put out their sustainability report. And in that report, they said in 2020, we paid 276,000 claims, not of COVID, but just total. So just as an insurance company that's been in operation for 114 years, they paid 276,000 claims for $5.7 billion in tax-free death benefit. Of that, they said in their sustainability report that 350 million of that 5.7 billion was COVID claims, and that was 4,200 insureds or customers. So again, 276,000 total claims in 2020, just natural, regular end-of-life claims or maybe accidental death, whatever it was, not related to COVID. And then of that, 276, 4,200. That represents, I think when I did the math, 1.5%. So 1.5% of one insurance company's claims were due to COVID. That's not that big of a figure, and it's not that big of a figure for an insurance company to say we're going to make drastic changes to the way we underwrite, but we do have to keep our eye on somebody that has had it. And we're going to have to keep our eye on somebody that has underlying issues. Let me speak to that. Cardiovascular, pulmonary, so think heart and lung. That's some of the primary things that are affected if you get COVID. If you have underlying issues or older age, say over 50, they want to make sure that those are not too serious. So we've seen people that used to be standard risk class, maybe they have an underlying heart issue, maybe an underlying pulmonary or lung issue. They can still get coverage, but now they may be rated. They maybe pay a little bit more than what they had before COVID. Does that make sense?
It does. Well, and Jay, you mentioned something earlier. You were talking about $1 million policy, $2 million policy. As we start winding the show up, one thing I want to tell people, because I'm your regular guy off the street representative, listeners, in case you haven't joined us on our journey over these different episodes. But I come from a pretty common place. And, I came in the industry with a lot of the same questions as many of the people that we serve now ask. So one of those things is, man, $2 million, Jay, that sounds horribly expensive. One of the jokes I wanted to tell you as we got into this episode was, I wanted to do an episode where we said, if you don't have life insurance, you're stupid. But I'm pretty sure, I'm pretty sure compliance would not go for that. But the point of that is, even $1 million, $2 million, obviously depending on your age and your health rating. But I can tell you, Jay, rarely does someone not surprised, especially if they're healthy, when they see the actual number, the power of their dollar, how far it goes when buying term insurance with that. So that kind of jives with what you were saying with the industry becoming more and more affordable as people live longer.
A buddy of mine reached out to me yesterday. We've known each other for years. He's 44 years old, so he's a year younger than me. And he said, "Hey, I think I need to get some coverage." And when I ran the rate on him, he said, "I just need it for 15 years. Both of my kids are teenagers. I just need to make sure that I get through these next 10, 15 years." And he's in great health. So 15 years of $1 million term was going to run him $49 a month. $49 a month for a 15-year plan to get him to age roughly 59 or 60, and he's got a risk management plan that if he goes through the underwriting process and gets preferred, then he'll have, for less than $600, he's mitigated that risk.
Yeah.
That's a no-brainer.
That's a no-brainer.
Now, granted, he's also a Gen Xer right there on the cusp of millennial. From that life insurance barometer study, Josh, it said 43% of millennials are very concerned about leaving their dependents in a difficult financial situation.
Good for them.
Or burdening others with burial or funeral expenses if they should die. So all you listeners that are in your 30s, if you can resonate with that statement, you probably need to review your plan and get with somebody like Josh and say, "Hey, do I have the right amount? I don't want to let my parents, their grandparents already kick us out of the house when we're only there for about 30 minutes or an hour. I certainly don't want to have to burden them with taking care of my kids." But in all seriousness, it seems as though the younger generations understand the importance of having a risk management plan in place to protect your family, protect your income, and not just the breadwinner, but also the person who's taking care of those dependents at the household. That's an important feature of everybody's plan, is to make sure everybody's on the same page, because heaven forbid if something happened to Casey, my wife, I still have young 8-year-old twins at the house.
Yep.
And that's caretaking, that's getting to school, from school. That's going to cost me some dollars to help get somebody to help me do that if something happened to Casey.
100%. Well, listeners, what can you do with this information? So number one is, if you are here in the Gulf Coast and you're interested in having a conversation about life insurance, particularly as it applies to going through a financial plan, one of the things that we're going to wrap the show up and discuss real quickly is a financial protection inventory. So, Jay, let's run through that real quick. What does that look like?
So if you sit down, somebody's going to call you, Josh, and say, "I want to do that inventory thing y'all talked about." We're going to look at your property, make sure that that's addressed. Now, you're not property and casualty licensed, but
No, sir.
you know people.
100%.
And you'll forward them to the appropriate person. So make sure their property is protected, their intent. Now, you're not an attorney. You don't draw up wills and powers of attorney, but you know attorneys that you can forward to, so your intent. The third component is the income, what we just discussed. That would be what happens if somebody dies early, or what happens if somebody becomes disabled and can't work. You've talked to that with many of your clients about protecting their income. The fourth component of the financial protection plan is retirement. Many of our episodes on Every Dollar Counts focus on that. We talked about IRAs and everything. Then we talk about health care, your health insurance plan. That also would be your health care during your retirement years. Your business protection planning, we've talked about that ad nauseum with some of our featured, Will Stye in the past.
The Boss Series.
Yep.
Heck yeah.
And then last but not least, the legacy. What's the plan for leaving a legacy to my children, my grandchildren, and what have you? You have this available, you those listening, have this available through Josh and his firm, Gulf Coast Financial Advisors, to go through that financial protection inventory and check the boxes. Prioritize those that are unchecked, and then sit down and craft a plan and execute the plan with application.
Perfect. Well, if you're interested in doing that, you can reach us at 251-327-2124, or you can visit our website, gulfcoastfa.com. That's Gulf Coast FA, FA's a financial advisor. While you're there, you can set an appointment on my Calendar app to have a conversation. It's free. Also, to all you independent and semi-independent advisors and agents out there listening and interested in what Jay Stubbs could bring to your practice like he has to mine, you can find him at jstubbs.com. That's JAYSTUBBS.com. Well, Jay, buddy, another show in the can. I want to thank our producer, Johnny Gwynn of Deep Fry Studios here in downtown Mobile. I want to thank you as my co-host. And as always, a huge shout out to all of you that have joined Jay and I on this journey. And to those of you that are joining us now, do me a favor, please subscribe on the Apple Podcast app or wherever you find your favorite podcasts. And while you're there, you would be doing us a huge favor if you would rate and review the show. It helps other listeners like you find us. Lastly, you like the show music? Go check out slothracerband.com. That's slothracerband.com, and they're going to take us home now. This has been Every Dollar Counts with Josh and Jay. Advisory services offered through Prime Capital Investment Advisors, LLC, PCIA, a federally registered investment advisor. PCIA, doing business as Prime Capital Wealth Management, PCWM, and Qualified Plan Advisors, QPA. Gulf Coast Financial Advisors is independent of Prime Capital Advisors. Information presented for educational purposes only, is not an offer or solicitation for the sale or purchase of any securities. All investments involve risk, and unless otherwise stated, be sure to consult a tax professional before implementing any tax or investment strategies.